Solutions Studios, this is Chicago's Morning Answer on AM 560, The Answer.
Listen to AM 560 The Answer online at 560theanswer.com, on the AM 560 mobile app, on your Alexa-powered smart speaker, and on TuneIn, iHeart, and on Odyssey.
Busted.
Only the biggest stories, only the biggest guests, and only the biggest opinions. This is AM 560 The Answer.
Top of the morning, Dan and Amy. Art Laffer was on Fox Business yesterday talking about the economy after the Fed's first much-anticipated interest rate hike, where things stand, and this is what the Laffer Curve founder had to say.
But when you're looking at this correctly, you're right. I don't see a heck of a lot in this economy that makes me happy or optimistic about the future. The producer's price index at 10% is a very high number. And what you have to remember, Sean, is that number is higher than the consumer price index, and it occurs at an earlier stage. So if you look at the stages of growth in a product going through the process, it means that consumer prices probably will be rising as well to rise up to meet the producer's price index. And you know, it's not a good outlook there. I don't see any much good outlook in what's happening in Europe. That's not good. In China, the lockdowns, these are all pieces of bad news. At some point, they will change, but I don't think they're going to change anytime soon, Sean.
And you have other investment advisors and commentators on these investotainment shows on Fox Business and CNBC calling on Americans to prepare for a recession this summer, a bear market real estate, a drop in stock prices, and basically the end of the world.
We're going to die.
So where are we at? What can we anticipate in the near term, meaning like the calendar year? For more on this, pleased to be joined by Jim Iuorio, analyst for Fox Business. Jim, thanks for joining us. Appreciate it.
Thanks for having me.
So what about what our friend Art Laffer had to say, and some of what you're undoubtedly hearing from other analysts on these investotainment shows about the bad news, the gathering storm, the end of Western civilization?
Well, I definitely have a lot of concern, but those guys are making me look downright rosy at this point in time. And maybe it's the glow of the NCAA tournament and the weather changing, but I think there are some things to be a little bit happy about. I think that when I just anecdotally going to restaurants, things I do, and I hate to even talk about COVID, but I think people are completely over that, and I think there probably is still some pent-up demand as far as traveling, things like that goes. What I am, though, very, very concerned. So the Fed tightened yesterday, and for more than a year, people like me, like Brian Westbury, like Art Laffer, like Larry Kudlow have been, and not to put myself in the same group with those guys, but you know what I mean, have been saying the Fed needs to tighten. This is absolutely ridiculous. There's no reason to believe that inflation is transitory, and they didn't, and they kept buying bonds. They kept buying bonds up until last week. Now they're tightening. They tightened yesterday, but the reality of it is people don't realize a couple things. When crude oil rallies to the price that it has, that's already an economic tightening. That's pulling money out of people's pockets and starting to slow down the economy. So now my worry is that the Fed's going to aggressively raise rates right into the teeth of a slowing economy, and they're going to cause a recession. I don't think when we think about recessions, people our age think about the big one, the Great Financial Recession, the recession that happened after the tech collapse in around the turn of the century. I don't think it's anything like that because I don't see these enormous built-up leveraged positions in different assets. I see a lot of built-up leveraged positions, but it's spread pretty broadly. So I don't think it's going to be terrible. But the yield curve, and I don't mean to get too into the woods here, but the yield curve, I know you guys know it, but for listeners, is the comparison of long-end rates to short-end rates. And when they get about the same or the long-end rates go below, it's a signal that the market is telling us that financial conditions are too tight, not too loose, not too low of rates, and that there's a recession that's potentially coming. So I'm definitely glum, but not as glum as those guys, if that makes sense.
But it seems from what Jay Powell said the other day when announcing that quarter-point hike that the Fed is going to use rate hikes to bring down inflation, and they will continue to hike rates until they see a positive move on inflation.
Yeah, and I think that they're committed to doing that. I hate the psychology behind the Fed, because once they've committed to doing that, their needle isn't pointed to zero anymore. They definitely have it in their head that they missed the boat to tighten. They're supposed to be tightening now, and when the situation changes, of course, I fear that they won't be able to identify that quickly enough. And that's happened a million times in the past. So that's, I think they're probably going to over tighten. And remember, our economy from a broad sense, and this is now I'm taking like a 30,000 foot, 35-year view on this. We need low rates because our economy is overtaxed and overregulated from every different governing body, from federal government, state government, county government, municipality government. There's too many taxes and regulations, and that's why the country needs the drip of low rates, which is then puts us in the situation where we build up bubbles and bust them every 10, 15 years. So unless we can figure out that, then we need low rates, and that's just a fact in my opinion. In my opinion, makes no sense. But what's that?
Hi, Jim. How are you?
Good. Hi, Amy.
Good. So what about the real estate market? When is that going to crash? Because there are so many houses that don't even last. My friend sold her house in 10 minutes. They paid cash and $20,000 over the asking price.
Okay, and that's great. So, but remember now, rewind the tape to when we were really building up excess into 2006, 2007. That had been going on for 15 years, where we were scratching our heads, driving out to those suburbs that are way even northwest of me that used to be rural, and you'd look and you'd say, who's buying all these houses? And it built up a long time. So what I'm saying is, when you're talking about the real estate market, it's always going to go on way longer than you think. And when it corrects, the correction is going to take way longer than you think, because it's not like a stock market where you can press a button and be out of your stock market position. In the real estate market, it takes a long time for these things to unwind. But I think there's still potentially, I don't know if there's much upside in the real estate market, but I'm not concerned. I don't talk to people all the time who said, yeah, I quit my job and now I'm just buying and flipping houses. And I did hear that a lot in 2005 to 2008, and I don't hear it now, and I'm not as concerned about that.
What about Bitcoin and crypto as an asset class, and this against the executive order that Biden issued last week, and dispatching study of Bitcoin and in consultation with what Europe is doing on cryptocurrency? Where does that go? How are you viewing cryptocurrency at present?
Okay, so the real, let's say how the enthusiasts, the hodlers, how they view it. They knew this was going to happen the whole time, and frankly, I'm perplexed that it didn't happen 5 or 6 years ago. I don't understand why global governments they don't like things cutting into their game, and currency and the stewardship of the currency is their game. But they allowed this to happen, I think, for far too long. So again, I'm fine with it. I'm just saying from their point of view. And over the last 3 years, we've seen a ton of institutional adoption of cryptocurrencies, and now the question is it past the point where it can be regulated out of existence? And I think the answer to that is yes. Remember, and Bitcoin was created to be a transfer of wealth outside of the banking system and outside of the central banking system. So it stands to reason that at some point in time that the banking system and the central banking system is going to become a little irritated and try to fight it. They were prepared for this fight, is what they will tell you, and it is perfectly capable of living through government regulation. And the proof of that is in countries where governments regulated hard, like China, the price of Bitcoin has gone up, not down.
Well, but there's also noise that the central bank will produce its own crypto, that perhaps some of the big banks will ultimately produce their own crypto once the regulatory environment stabilizes. What would the impact of these cryptocurrencies at present competing with a crypto backed by the full faith and credit of the United States be?
Okay, this is, to me, is a terrifying discussion when we talk about when the United States says they want to have a digital currency. What they're really saying is, and this has been, other countries around the world, socialist countries, have adopted this tact as well. They want to move everybody into the banking system, eliminate currency, and then all of a sudden there's nothing that goes on anywhere that they do not have knowledge of. And And it's amazing to me that people want it. And this is all part of, it's going to be a social credit score and a digital ID that shows your vaccine status. These things are all connected. And I don't mean, again, people call us conspiracy theorists, and then everything we say happens to come true about 6 months later. The digital currency thing that central banks and governments are talking about is an awful thing, and it's a boost to cryptocurrency. It's not a competitor to cryptocurrency. It's if cryptocurrency can stay anonymous and stay underground, then it gives it more of a reason to own it.
Well, and so then, and to the extent that you're knowledgeable here, I don't want to get past your comfort level with crypto. But we're constantly trying to get our handle on this. The underlying blockchain technology is, can you separate crypto from the blockchain technology in terms of the promise of the technology, separate and distinct from its manifestation as a digital currency? So
first of all, there's never something I won't talk about. The fact that I don't know enough about something is never going to stop me from talking authoritatively.
Yeah.
Right? But to answer your question, I don't know. Because I always concerned with how does the anonymity to be protected in the crypto world, and that's basically what you're saying, right? Is the blockchain technology traceable, and are people going to be able to figure out who's paying who what? And again, when I'm saying all these things, I think it sounds like I'm advocating for some sort of criminality, and I'm not at all. I'm advocating for rights to deal with things the way you want to, and not having someone looking at your transactions and discussing if they think they're moral or not. And that's what I'm saying. And to answer your question, I don't know the answer to that question. And so we're out of my depth there.
Before we let you go, we started talking about consumer and producer prices and inflation and what the Fed is doing. So, what's your anticipation as it pertains to energy prices and how that translates to the price at the pump with Willie Wilson running around town paying for everybody's gas? He can only do that for so long, Jim.
I thought that was illegal to just pay people to vote for you. I mean, I really
he's not running for anything.
Not running. He's not announced yet. I mean, he will later.
He's not announced yet.
But he's going to have a gas giveaway in the suburbs too.
In Chicago, it's illegal to not pay people to vote for you.
It just baffles me. I read these stories. He's paying people to buy gas. I'm just. It's amazing to me. The inflation. For a year and a half, I was arguing that inflation isn't transitory. Now I'm back to arguing that it is transitory. There's a couple things that are at play here, and let's talk about crude particularly, is that one of the cures for high prices in crude is high prices in crude. It's a demand destruction thing. Part of the use of crude, the consumer use, is inelastic, the part that you're going to work, things like that. But then there's a part of it that's very elastic, the discretionary use of crude. And the question becomes at what level of gas prices does demand destruction start to happen? And I think we're arriving there now. So I think if we get gas prices to the high $4s, $5, people will start using less. Demand goes down. And at that time, what's supposed to happen is suppliers are rushing to the scene to drill more. We know what's happening on the federal end here. They're not allowing that to happen, or at least discouraging it through rhetoric. But I do think prices are going to come down now. The flatness of the yield curve is suggesting to me that demand is going to go down, not just in crude, but in a lot of things, and that prices are going to go down. It's going to be under the overarching theme of a recession, which I don't think it's going to be that bad of a recession, but I think that things could right the ship at some point in time in the next year.
He is Jim Iuorio, analyst for Fox Business and proprietor of Brandt's in Palatine, where they have the best burgers in town. There's some pretty good ribs, too, I may add.
I like the tacos. Are you still at the tacos on the menu?
Yeah, we still have them. People buy a lot of those fish tacos.
Oh, they're so good.
They're my favorite. Yeah.
Now I'm hungry.
All right, Jim, get back in the kitchen.
See you guys.
Thanks, Jim. And he joined us on our turnkey.pro answer line.
The more you listen, the more you'll know. This is Chicago's Morning Answer. Morning Answer on AM 560. The Answer.
The following is a paid political announcement.
I'm Gary Rabine. Starting with nothing, I built many successful businesses, creating thousands of jobs right here in Illinois. Small businesses and jobs are under attack by J.B. Pritzker. That's why I'm running for governor. Join myself and Major General John Borling March 21st at 5 p.m. at Code 1 Hangar, 1601 Grumman Drive in Rockford to hear how we're going to reform and rebuild our great state. For more details, go to RabineForGovernor.com.
Paid for by Rabine for Governor.
Any supplier can drop a box outside your door. But if you want a partner who